I'm with Thomas Merrick now. He's the managing partner for Swiss Infinity Global Investments. He spends all his time in Switzerland now, but he's really from the U.S. here. And thanks for joining us on the show. Good to meet you. Good to have you on.
Pleasure.
Well, you're a speaker here at Total Wealth Symposium. What's the sentiment been like for you? What's this experience been like for you?
It's been a really good few days, I have to say. I came in with a decided agenda to address some of the elephants that are in the room.
Lots
and
of elephants.
It's a lot of them and a lot of big issues that we're dealing with these days. I have a fear that there's too much gloom and doom though. And so for me, a really important factor was to talk to people and say, listen, there are some big issues that we have to deal with today. There are some fundamental problems in the world, but it's a period of change. It's not the first time we have this. And there's also things to look forward to.
Well,
there's opportunities.
Yeah, well, this is a rarity because many people I do interview have a gloomy outlook on the global economy. So how do you see it?
I see it in terms of time. You have to take two different time measurements, I think. And I have an old saying, if you let me pick the time frame, you can make any story look good or bad. Enron at one point was a great buy. But the time element is important, I think, because there are some immediate issues, but there are always immediate issues. And then there's some fundamental issues. A lot of the things that we talk about right now are short-term issues, but there's also longer-term issues. So depending on what you're looking at, you can certainly make the pro or the con case. The Fed watch that goes on constantly. The folks in my part of the industry are obsessed with that. You see money flows into the U.S. and clearly there's foreign money chasing that interest rate hike. The first one that we got back in December, and now I think the likelihood this month is very low. Actually,
okay.
Yeah.
I thought you were going to say high.
But interestingly, even a week ago, the probabilities based on futures were significantly higher. We as Americans know, though, that historically in an election year, you get very little chance of the Fed acting because they don't want to influence the race. As we go out to to December, you have a greater chance, and then certainly next year, that normalization has to come. But on the bigger scale, again, all of these issues don't necessarily stop the opportunities that are available to find industry-leading investment opportunities, to look at things like the physical metals that balance out some of the risks that are out there.
So, given the current landscape, you mentioned physical metals, what do you like as part of a portfolio?
You know, for our work, the physical gold primarily is a cornerstone of every portfolio that we have. Most of our work is with U.S. persons who are internationally invested. They're looking to have that diversification to their classical U.S. portfolio. The gold component is something that we always advise, and that in our self-managed portfolios that we always include there.
How much allocation, sir?
Right now we're at between 15 and 20%.
High allocation. It's funny, most people at this conference are allocating that much. It's a big percentage.
Yeah, and you know, I think long term, the lowest we've been the last few years is 10%. For us, it is, on the time question, it's a long-term play, but we actually felt that the gold market, as many people did, end of last year, started to find a floor. And ironically, the gold play for us is partly the classical gold play, but it's also a play on the dollar. We think that there's some long-term risk that the dollar continues to slide.
Okay.
Short-term, it might have a bump with the interest rate hike, people seeking that. The economic picture can change that if the U.S. has a great spike, but the U.S. is having ebbs and flows in the economic data.
So if you're this bullish gold, where do you see the metal heading?
We're, through the end of the year, which is now a kind of short time horizon, we've been looking for it to end up somewhere around 1,400. We're maybe a little bit back from that now, so maybe we end up a bit shy of that. But early next year, certainly we could see that level. We also think if the dollar starts to pull back, that certainly can give gold a boost. I mean, we've seen it getting up in the high 1,300s already this year.
Finally, you're based in Switzerland. Give us a little bit of a snapshot of what the sentiments in Europe like right now.
Yeah, great question. Obviously, we had a tumultuous summer. The Greek issues came on the horizon briefly again and passed more or less without event. And the big thing was Brexit. Switzerland's always an interesting place because it's this oasis in the middle of the EU, but of course the EU is its biggest trading partner, so everything that happens there, even the social dynamics with the immigration issues and the people seeking shelter from the crisis in the Middle East, these are big issues. I think Switzerland itself is very happy to be independent. It has a lot of strong agreements with the EU, but it maintains its own independence. I think sentiment in the EU itself is fairly mixed. There's a lot of people that have concerns about certain parts of the Union, but I often tell people you have to remember that the EU, pre-Brexit, which is not completely finished, it's the world's largest economy. So when you think of it that way, that's a powerful thing that you want to be careful about letting go. Don't get me wrong, there are problems in the Union. If you compare the EU to the US, for example, we're a union, but everyone in the union is American. We may fight between New York and California, in my home states between Texas and Oklahoma, but at the end of the day, you're all American, speak the same language. Over there, they're still trying to deal with the issue of multiple countries, multiple languages. The currency union is probably the thing that we look for some kind of a change, because there was a bit of a problem in the design that everyone has now identified, this difficulty between managing national issues and local control versus ceding some control to the EU. And who knows what the outcome will be there, but I think what's clear is there will be some changes.
Thomas Merrick, it was a pleasure meeting you. Best of
My
luck.
pleasure as well. Thanks
Enjoy
for
the rest
having
of the
me.
conference, and
Thanks
thank you
very
for
much.
watching our coverage here from Total Wealth Symposium. We'll have more for you on Kitco.com. Thanks for watching.